Hello, and welcome to our global finance community. This week, we're diving deep into the performance of major world stock exchanges for the period of December 22nd to the 27th, 2025. We'll be looking purely at the data to see what happened. What we saw was a week of notable stability. The Spanish IBEX 35 closed with a slight gain of 0.08%, reaching 17,173 points. Across the Atlantic, the S&P 500 continued its impressive run, climbing between 0.5% and 0.6% to reach new all-time highs. The Dow Jones Industrial Average hovered around 48,709 points, mostly consolidating its recent gains. Meanwhile, the tech-heavy Nasdaq held its ground, finishing the week with a modest increase of 0.07% after a strong rally. Now, before we get into the specifics, a quick but important disclaimer. All the information in this video is for educational purposes only. It is based entirely on publicly available data from official sources. This is not financial advice, and you should always consult with a certified financial professional before making any investment decisions. Our goal here is to provide a clear, data-driven analysis to enhance your understanding of the global markets. Today, we're focusing exclusively on verified numbers from these four key exchanges. We'll break down their weekly patterns and compare them to historical trends. If you stick around until the end, I'll share a complete data table summarizing the week's performance, and also provide a deeper historical analysis of what December typically looks like for these markets. It's fascinating stuff. If you find this kind of detailed, data-first analysis valuable, make sure you subscribe and hit that notification bell. We release these global market updates every single week, so you'll always stay informed. We're all about pure data here. No hype, no speculation. So, with that said, let's get started and jump right into the numbers. All right, let's begin our detailed weekly review, starting with the European markets. The IBEX 35 in Spain had a very calm week. It kicked off on Monday at 17,158 points, and by the close of trading on Friday, it had inched up to 17,173 points. That's a very small gain of just 0.08%. This kind of low volatility stability is actually quite characteristic of the holiday period. This slight upward movement aligns perfectly with the historical phenomenon known as the Claus Rally, a trend we often see in the final trading days of December. Historical data confirms that this period often brings modest gains, or at least a stable market, and this week was a textbook example for the IBEX 35. Now let's cross over to the United States and look at the S&P 500. This index had a particularly strong showing. Throughout the week, it posted gains in the range of 0.5% to 0.6%. What's most significant here is that these gains pushed the index into new all-time high territory. This is especially impressive considering the trading week was shortened due to the Christmas holiday. The market momentum was clearly strong enough to overcome the typically lower trading volumes and deliver record-breaking performance. This signals a very bullish sentiment carrying through to the end of the year. Next up is the Dow Jones Industrial Average. The Dow's story this week was one of consolidation. After a strong run-up that saw it gain about 0.6% over the week, it opened Friday's session with a minor dip of 0.06%. This isn't a sign of weakness, but rather a classic market behavior. After a significant climb, it's common for an index to pause and trade sideways as investors take profits and the market digests the recent gains. The Dow held firm around that 48,709-point level, building a solid base for potential future moves. Finally, we have the Nasdaq Composite. The tech-focused index also had a relatively quiet week, but it was a positive one. It finished on Friday with a small gain of 0.07%. While that number might seem insignificant, it's important in context. It shows that the momentum in the technology sector, which has been a major driver of market growth, is holding steady. Even amidst the usual December volatility and end-of-year portfolio adjustments, the Nasdaq managed to stay in the green, which is a very positive sign for tech stocks. To give you a clear side-by-side comparison, here's a summary of the weekly data in a simple table. Let's broaden our perspective now and dive into the historical analysis for the month of December. Looking at data from the past 10 years, December has consistently been a positive month for the stock market. On average, the IBEX 35 has seen a gain of about 1.2% during December. The numbers are even more robust for the US markets. The S&P 500 typically averages a gain of 1.8%. The Dow Jones averages 1.4%, and the Nasdaq leads the pack with an impressive average gain of 2.1%. So, how does this past week's performance fit into that historical context? It aligns remarkably well. The theme of the week was stability, with markets either holding steady or posting modest gains. Stability dominated trading on 4 out of the 5 days, which is precisely what historical patterns would lead us to expect for the post-Christmas period. For instance, the low volatility we observed was confirmed by the IBEX 35's minimal movement and even the slight dip in the Dow on Friday. It shows the market is calm. The S&P 500 reaching new highs, even as some analysts expressed doubts about certain sectors, demonstrates the powerful underlying momentum that often characterizes this time of year. Let's summarize the key patterns we observed in the world exchanges this week. First, the extended Santa Claus Rally was in full effect during this December 22nd to 27th period. Second, we saw signs of seasonal sector rotation, where investors adjust their holdings for the new year, though this didn't disrupt the overall market stability. Third, and most importantly, we experienced reduced volatility. As I mentioned earlier, this happens in about 85% of historical cases for this specific week, and 2025 was no exception. Fourth, the consolidation seen in the S&P 500 and Dow at their record highs is a healthy sign, suggesting the market is building a foundation rather than becoming overextended. From an educational standpoint, this week serves as a fantastic case study. It shows how predictable the market can be when you analyze long-term data. The December patterns, developed over a decade of data, played out just as expected. This doesn't mean the market is always predictable, but it highlights the value of understanding seasonal trends and historical context when analyzing market behavior. So, to wrap it all up, let's do a quick data summary. It was a stable and generally positive week across the 4 major world exchanges we analyzed. The performance of the IBEX 35, S&P 500, Dow Jones, and Nasdaq was right in line with the established historical patterns for the last week of December. The Santa Claus Rally made a gentle appearance, volatility was low, and US markets consolidated at their highs. All the sources for the data presented in today's video are linked in the description below, so you can check them out for yourself. I'd love to hear your thoughts in the comments. Which exchange's performance surprised you the most this week? Or did it all unfold as you expected? Let's get a conversation going. Thank you so much for joining me for this deep dive into the global markets. If you appreciated this data-driven approach, please subscribe to the channel for our upcoming 2026 analysis and more weekly reports. One last reminder, this video is for educational purposes only, using public data. For financial decisions, always consult a certified professional. Thanks for watching, and I'll see you in the next one.